Are you aware that there are an increasing number of metropolitan areas with dropping sale prices? Home sale prices decreased year over year in 15 of the top 50 US metro areas, many of which were in California, as opposed to 11 out of 50 metro areas a week earlier. This is pretty much crazy because based on data, it can be seen that prices are dropping. What does this mean for you? Stay tuned to know more. Please consider liking and subscribing, especially if you like this type of content. We always appreciate any kind of support. Note that the ideas and suggestions presented in the video are for informational purposes only. Please consult a certified expert first before making any financial decisions. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the juicy details, then make sure to watch until the very end. Going back to the case at hand, it must be known that, according to REDFIN, 15 of the top 50 metro areas are declining in sales prices, which is basically 30% of the cities on the list. If you want to see the data, you can see the link in the description. That being said, this is alarming, especially to those home buyers looking to buy some properties in the area included in the list. The markets analyzed include cities like San Francisco, Los Angeles, Austin, Pittsburgh, San Jose, Oakland, Detroit, and Sacramento. Looking further at the data from Redfin, the largest decrease comes from San Francisco at 7.3% year over year, followed by San Jose at 3%, Los Angeles at 3.3%, Austin at 3%, Pittsburgh at 2.6%, Oakland at 2%, Detroit at 1.9%, Sacramento at 1.8%, and 1% for other cities including Anaheim, Chicago, Seattle, Riverside, Phoenix, Las Vegas, and Philadelphia. All these percentages are in the red, and it must be noted that most of the cities are in California. As for Las Vegas and Riverside, the decline in price is the first time for these cities since 2015. Well, how did this happen? There are multiple indicators that contributed to this. Some of them are increased inventory on the market, which leads to lower demand. Specifically, home buying indicators show that demand is down by 27% compared to the previous year. Online searching about home sales is also down by 34%. Fewer and fewer people are asking for tours, with a huge decrease of 40% compared to the beginning of the year. This pretty much says that although mortgage applications had an increase of 4%, which is understandable due to lowering interest rates, this did not really do much about the decline of demand. In fact, applications for purchase are down by 38% since the previous year. The demand is pretty low for these homes, which can actually push the market toward the buyer's side. Buyers may end up raking in more advantages if the trend continues downward. The monthly payments as well as home prices will go much lower if this continues. This is basically the work of supply and demand in our hands. There are about 3.7 months of supply in the market as per Redfin. And seeing this much supply with declining demand, it can be seen that the real estate industry for the areas involved isn't faring well. Real estate companies who sell properties might offer some incentives once the buyers gain more power in the market. At this point in time, though, it might be too early to see such moves happen anytime soon. It might probably start by 2023. There might be attempts to pull the market back up if the decline continued and actually caused many businesses to go bankrupt. There is also data that shows new home listings dropped by 21.5% and pending home sales by 33.3%, both of which are down compared to last year according to data from Redfin. So even if there are fewer new listings, the supply still outpaces the demand. If you look at the median price compared to last year, you will see that the median price for 2022 is slowly approaching the end of year price of 2021, which is lower, being at $348,000 in median sale price. The peak median price in 2022 is $388,000, and the price as of December 11 is $358,000. This pretty much means that the price is down by around $30,000. For anyone who is looking to set up a real estate business, the data shown here pretty much says that real estate is not always on the uptrend. It requires a bit of caution before you make any big moves into the market. You can't just enter the real estate business and just assume that the house will sell just because it's inside a well-populated area. Remember that this is only one of the factors that can affect it. There are many other factors to consider as well, such as the state of the neighborhood, the state of the home, the accessibility of the location, and market trends. Take note that having more population also means that there is a ton of competition. Seeing the demand decrease and supply increase, it will be harder to look for more buyers. And if you do choose to sell houses, it might take longer time than expected for you to earn your investment back. Remember these metro areas mentioned as well as the fall in price. Before you make any decisions, you must look at the current state of the market first with the data shown. As for someone who's only looking to buy a home, it is recommended to buy a house that you can sell. Why, you ask? Well, lots of things can happen. And if you eventually want to move and sell your property, you might have a hard time doing so if the property you're in is not up to the standards of the current market, or if it's located in an area that is not in demand at the moment. This is especially so if the location of the property usually experiences a decline in market trends. Hopefully, this video gave you some good information about the current state of the real estate market this year. It seems that there is a reward for patience, especially when not giving in to pressure when the price gradually increased since May. Now we can see that this trend is slowly declining, and you can as well hope to see a decrease in housing prices for months to come. Of course, it is very much advised to observe due diligence when it comes to this topic. Do keep observing market trends. Consult professionals and choose wisely whether to buy or not before committing yourself to anything. As always, we in EM3 wish you the best of luck in any of your endeavors. In the meantime, we hope you enjoyed watching this video. And don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so to see more of our content. If you liked our content, then please check out our other videos. Thank you for watching and see you in the next video.